For some couple of days now, Nigerian stock market has been in red. There have been heavy pullback. The stock market declined by 3.6 trillion, while the market cap fell to 153.3 trillion. It was a big blow to investors after enjoying massive profits before now. Before I go further, this is a disclaimer. This video is for educational purpose based on my own personal research from data I Google search. Before you go into any investment, please seek the advice of your financial advisor so that they can put you through. Hi, my name is Betty, and on this channel we share strategic business ideas, investment and financial freedom in a simple way. And if that is what you're looking for, just relax, watch this video to the end. And if the video had value to you, subscribe, press that notification button and share this video to your loved ones. Let's dive in. Stock prices are falling, even the ones that did better from the beginning of the year. And that is making investors to panic, whether to sell or they should just hold on with the stocks. But smart Nigerians are already taking position in this pullback period. What if I told you that in your stock investment journey, stock dip is normal, it's going to happen, but it's going to bounce back. When this happens, it creates opportunities for investors to buy more or invest more, because as the prices are lower, they can buy more and add to existing stock they have. In this video, I'm going to reveal to you 1. Why Nigerian stock market is losing. 2. 7 strategic steps to take when stock prices are falling. From beginning of the year to May, the market did 60%, but just a couple of days ago, we start seeing the stock market in red. About a week now, the stock market had a heavy pullback that led to a loss of over 3 trillion naira. But why is this happening? Looking at data, research, and history over the years, we could see the recurrence of this happening. This could be due to investors selling off their shares to take profit. This could also mean that investors and portfolio managers are restructuring their assets to see how far they've done for the first half of the year, and probably also strategizing for the second half of the year. These are the 7 strategic steps to take when the stock markets are down or looking red and bearish. Number 1 strategic step to take is to stay calm. You need all the calmness you could exercise, because at this point you need to be focused. That means you need to be calm and stay focused. It is not the time to be panicking, because when you stay calm, you'll be able to see the bigger picture. Going to 2nd strategic step to take when the stock market is down. Avoid frequent checks. Most investors check their stock portfolio now and then, even especially at this period of dip. You don't need to start checking your portfolio now and then. This brings panicking, puts you in a state of anxiety. All you need to do, leave the stock and take your time to watch it, not frequent check-ins. This can lead to tension and even affect your health. The truth is that stock market experiences up and down, and that is why I always advise that any stock investments you are doing, let it be for a long-term goal. If you're a long-term investor, sit back, relax, and watch how the stock market bounce back. You don't need to do anything, just relax. Moving on, let's go to the 3rd strategic step to take when the stock market is down. Review the reason why you bought the stock in the first place, and ask yourself the big question, why? When you have already affirmed to yourself the reason why you bought the stocks in the first place, it relaxes you with no anxiety or panicking or high tension. Some people, why is that they bought those shares for capital appreciation. Some people, why may be that they bought those shares for dividend paying, And why some people's why might be they held on to those stocks for a long-term projection or for retirement purposes. Whichever of this is your main why, just be calm, relax, and watch the market bounce back. Because the truth of the matter is that there will always be a dip at some point when you are investing a stock. And this is what smart investors will do. Let's move over to the first strategic step to take. And that is check the fundamentals of each of these companies you have bought their shares. This gives you a form of relief when you do so. Check their profit before and after tax. Also, check their revenue growth. Check their management structure. Maybe they are efficient, proactive. And lastly, their PE ratio and dividend history. Have they been paying dividends over the years? As their revenue growth has been increasing over the years? As their shares be appreciating? These are the fundamentals you need to check in each of those stocks. That gives you an idea and a breakdown of whether you need to sell or leave the stock as they are for them to bounce back. And don't forget their debt portfolio. All these I've mentioned will make you to have an informed decision on which step to take. Let's move on to the fifth strategic steps you need to take when the stock market is down. Check your risk appetite or tolerance level. Because at this point, many opportunities will be open to you to buy more stocks as prices are falling. The question is, are you comfortable with the stocks that you have now, even as the prices are falling? Or you are comfortable and your risk appetite is high enough for you to buy more stocks? That is why you need to check yourself, check your level of risk tolerance, and know the next steps to take. At this point, you need to sit down, relax, and ask yourself those questions. Or maybe that you need to restructure stock portfolio. Before I go on, have you liked this video? Have you pressed that subscribe button? I trust you do so. Thank you very much. Let's move to the number 6 strategic step to take when stock market is down. But some investors will be afraid. Millionaires are made for just taking this simple step. What do I mean? Some people bought shares when the prices was just 2 digits, and they watched their stock grow up to 3 digits in figure. Let me use the example of MTN. Some years back, MTN was, I think, 97 naira or thereabout. Guess how much MTN stock is now? At a time this year, it rose up to 800 naira. The same way, millionaires are being created when they buy shares when the market is down at lower prices, and by the time over the years, looking at a long-term projection, the prices of the shares rose up. They take position by making profit from this opportunity. Finally, moving on to the 7 strategic steps to take when stock market is down, and that is focus on the bigger picture. What does this mean? This means that look at any stock investment you are doing with a mindset of a long-term goal. With this, it saves you the headache of the fluctuations, the volatility in the stock market, which comes once in a while. It also gives you for your stock price to appreciate over the year, thereby deriving capital appreciation. Now is the period and the time for you to seek opportunities that are available for you to buy more. What do I mean by this? Because as the prices are dropping, it's either you buy these stocks to add to the ones that you have before, or you see new opportunities of stocks that you don't have before that you can buy because the price has already fallen right from what it used to be before. Yes, I know that market dip can be scary. When the stock market starts going down, when the stock's prices start going down, I know it can be a bit scary. But let's look at the bigger picture. Checking from history, once there's a market dips, companies bounce back over the time, and investors begin to enjoy capital appreciation, fantastic dividends being paid, and also the stock price rising up. And when this happens, the stock market will be bullish and every investor will be happy at the end of the day. With all these 7 strategic steps I have reviewed to you today, sit back, watch this video to the end and look at those steps I reviewed in this video so that you'll be able to make an informed decision on what steps to take, on what your next decision is going to be. And having said all this, take advantage of the stock market correction now and come back in the next 3 years or 5 years and check your stock portfolio. You'll be glad you took those steps then. So let me ask you this question. Are you selling your shares or you are keeping them for them to bounce back? Let me know in the comment section. If you are buying or acquiring more stocks, which of the stocks are you buying? Let me know in the comment section. And remember, your financial wealth starts with the little decisions you make today. See you in my next video.